We believe that a tax system must be simple and equitable. It must encourage investment and support businesses while making sure not only to overburden ordinary Fijians and foreign investors. Given that we administer the bulk of the tax laws, the way we operate has a profound impact on the private sector, in particular the costs for business in dealing with government. But FIRCA's role is not just limited to a fiscal function. Any fiscal policy must balance the needs and demands of the people, the economy, and government. Government relies on FIRCA to facilitate economic growth by encouraging investment through ensuring that the private sector is allowed to do business with certainty and confidence. It is impossible for FIRCA alone to meet these objectives. It needs the cooperation. It needs the cooperation and partnership of other government agencies, and most important, you investors from the private sector. My presentation this morning will be firstly to provide an overview of the tax revenue, just have a feel of the revenue performance from 2013 and going backwards. Secondly, to advise on the 2014 new revenue measures that was announced last year in the 2014 national budget. And thirdly, advise on the tax incentives and duty concessions that are provided by government administered by FIRCA. The 2014 revenue measures is geared towards strengthening our Fiji economy. That is briefly the outline of my presentation today. Just to have a feel of the 2014 revenue performance, the total tax revenue collected in 2013 have exceeded all expectation. The total revenue collection was 1.8 billion against the target of 1.85 billion. Have been consistent with the latest macroeconomic fundamentals announced in the 2014 budget. The collection were 118.9 million more than the collected in 2012. The improved performance signaled positive 2014 revenue outlook. The solid performance in revenue collection are attributed to many factors, such as government's expansionary fiscal policy stance leading to economic expansion by 3.6% in 2013. Improved compliance has been observed as FIRCA has taken an aggressive step in auditing high-risk taxpayers. By adopting a low-tax regime, FIRCA has progressed towards having a solid compliance approach in dealing with high-risk taxpayers. Improved debt collection has been observed as FIRCA has collected 74.2 million. The total arrears as of 31st December 2013 is at a record in FIRCA's history, which has been reduced tremendously to 60.9 million. The tax arrears reduced by 43.5% in 2013 over the 2012 amount. Increased taxpayer education to institute voluntary compliance. The revenue collection in 2013 was about 24% of GDP, and it was about 89% of the total government revenue as per the 2013 budget. The tax to GDP mix has changed over the last 10-year period, signifying more reliance on indirect source of revenue such as VAT. You can see the tax mix on in the pie chart. Before in the early 90s, in the early 2000s, reliance was more on the PAYE tax and the corporate tax. Now you can see that the pie has been more divided into the tax mix comprised of the value-added tax, which is equivalent to the goods and services tax, We've merged with the customs department, so we also add into our revenue collection the customs duty, and there's PAYE tax, and there's also social turnover tax. Social turnover tax is has taken over of what used to be the hotel turnover tax, and hotel turnover tax, the revenue collected from there was only on the accommodation and the turnover sales at the hotels. Now we've widened the base, and we've called it service turnover tax. It's just not relying on accommodation and bar turnover sales. It has included charges from eating in a restaurant in the hotels and other activities that are provided that encompasses the tourism industry. The revenue collection in 2013, the economic environment in 2013 was very conducive to achieve high performance revenue growth. The upward revision of the 2013 real GDP rate from 3.2% to 3.6% increase in investment to GDP ratio of 22%. High consumption caused by expansionary fiscal policy stance and other factors such as improved compliance, revenue administration have contributed to high revenue buoyancy. VAT continues to be the dominant source of the overall tax revenue by 40%. Income tax and customs accounted for 21% and 24% respectively. Whilst STT, we also collect departure tax. From 2013, we have taken over that role. Departure tax and other taxes account for 3%, 5% and 7% respectively. The revenue target for 2014 poses a challenge for the authority with a forecast of 1.8 million in 2013. For 2014, our revenue target is that is required by government has risen to 2.3 billion. There will be more emphasis on compliance, debt collection, environment, targeted and activities, public relations, and clearance of VAT refunds will be targeted on, will be vigorously targeted by FERCA. From this year, there's a big reform that that's been implemented by FERCA. We've moved away from being reliant on taxpayers to launch their end of the year return at the end of the year, and then FERCA works out an assessment whether they have to pay. If they are under tax, they pay back. We'll send them a notice, and for them to pay back the tax that they owe the tax office, or if they are overtaxed, we send them a refund check that they've been overtaxed by their employer. We've done away with that. We've made it more simple and much more effective. We've introduced a reform called as PAYE, as final tax. That means the burden of paying the correct tax shifts to the employer. The employer reads the tax legislation and correctly deducts the right amount of tax and pays that to FERCA. So FERCA doesn't have to, it cuts out on administrative costs. I believe that is more like the self-assessment in Australia. Going on to the just having a feel of the our revenue performance. We'll now go on to the announcements of the new revenue measures that was announced in the 2014 budget. Looking at the corporate tax rate, I've made a comparison there to the countries that are there. Fiji's corporate tax rate has been reduced to 20%. And if you relocate your headquarters from overseas and relocate it to Fiji, the further incentivized, the corporate tax rate is further reduced to 17%. There is public companies that can be listed in the South Pacific Stock Exchange. If you list in the South Pacific Stock Exchange, the corporate tax rate is further reduced to 10%. As comparison to other countries, you can see Australia's corporate tax rate is sitting at 30%. New Zealand is sitting at 28%. PNG, our major trading countries. PNG is sitting at 20%. Samoa, the region, 27%. The PAYE tax for individual residents, that's the tax bracket from 16,000, that's the taxable threshold. Less than that, there is no normal tax. But above that, from 16 to 22, 7% of excess over 16,000, and from 22 to 50,000, 420 plus sitting at 18%. Above 50,000, there's sort of like a flat tax rate of 20%. But if you're going to be earning more than 270,000, that's where the social responsibility tax kicks in. And it starts off with 23% of excess of 270,000 and increases on an incremental rate. The social responsibility tax is not there to stay. It'll be just there for a certain period, and it's going to go away. The non-resident individual tax is there. It's the same. Below 16,000, the taxable threshold, there's no tax. 20,000 of excess of, 20%. And the same as the resident at 270,000, there's a social responsibility tax at 23% that kicks in, and it goes down on an incremental system. The social responsibility tax was renamed in 2013 to be, it used to be the social responsibility levy, but now we want to, we've renamed it so that it can be used as a tax credit. We have a double taxation agreement with Australia in which we determine the source of income and determine who has the taxing right in terms of dividend, in terms of business profits, professional fees. So we've renamed the levy to social responsibility tax so that that can be a provision in the double taxation agreement. If Fiji taxes it here, then you can claim it as a tax credit in Australia. So you will not be taxed on that. I've already mentioned about the corporate tax rate that has been reduced. What it used to be from sitting at 32%, now it's 20%. And if we further list in the South Pacific Stock Exchange, it's further reduced to from what it was at 18.5%, reduced to 10%. Further incentive, the income tax and capital gains tax will be exempt from trading of shares in the South Pacific Stock Exchange. We also have capital gains tax here in Fiji. It's sitting at 10%. I believe in Australia it's also 10%? 15? 15. Thank you. The tax-free region from Korovo to Tavua. Korovo to Tavua is within the mainland of Viti Levu. This is Viti Levu. It's towards the northeastern side of Viti Levu, going that way. I believe when you came to Fiji, you came through the western side, from Nandi coming this side. From the Korovo to Tavua within the mainland, from Suva going northeastern. The incentive that's been provided is available to all new businesses, trade and manufacture. It ranges from 13 to 20 years tax holiday. If you are engaged in any trade or any manufacture or business with the criteria, it has to be a newly incorporated company. So it's available only to companies. And the taxable threshold for that level of investment is 2 million, 1 million. If you will be engaged around, you establish your business there, you can award yourself 13 to 20 years tax holiday. Okay, for 13, any new business, any new manufacturer or trade. But if you are going to engage 5% equity participation of indigenous Fijian to any trade or business, you add yourself 5 years tax holiday to your 13. So that makes it 18 years tax holiday. But specifically for tourism, if you're going to have 5% equity participation of indigenous Fijian, you add 7 years to your 13. So that gives you 20 years tax holiday. Extension of the employer taxation scheme incentive is 150% tax deduction for employment taxation scheme, ETS. Incentive will be extended from it was extended from 2014 to 2018. The scope of the ETS incentive will also be expanded to include apprentices and trainees. You as an employer, if you are going to be employing first-time school leavers as apprentices or trainees, you'll be available for a 150% tax deduction. You work out your net profit that's available to tax, then you less that by the 150% tax deduction, so that will give you your income that will be chargeable to tax. That's incentive for the employment taxation scheme. The tax deduction in voluntary contribution to disaster relief, a new 150% tax deduction for voluntary contribution of cash donation by businesses towards the disaster relief fund will be introduced. It's already been introduced. The threshold will range from a minimum contribution of 10,000 to a maximum contribution of 100,000. Any cash donation towards the disaster relief fund the tax, sorry, if I can just say, the tax incentives that are available, it's either in a tax holiday, years that you're relieved from paying corporate tax, or it's in the terms of tax deduction, a certain percentage is reduced from your taxable profits, or it's in you are exempt from tax at all. So the ones that are, I've already said, the tax holidays, these are the tax deductions. Tax deduction on sports sponsorship. If you're going to be, this is to promote cash donation to sponsoring sports. The minimum threshold for 150% tax deduction for sports sponsorship will be reduced. It was sitting at 100,000, the cash donation. Now it's further reduced to 50,000 to allow corporate entities to sponsor sports in Fiji. Tax deduction on sponsorship for hiring of international sports coaches, not only for sponsoring sports, also sponsoring international coaches, sporting coaches to Fiji. There's 150% tax deduction for sponsorship between 100,000 and 200,000 towards the hiring of international sporting coaches. Tax deduction on cash contribution towards housing projects. 150% tax deduction will be for cash contribution up to 50,000 towards any government-sanctioned housing project for squatters and informal settlements. Extension of the export income deduction. If you are going to be engaging in the export industry, once you manufacture, process your goods here, you can, that's looked after by the Fiji Exporters Council. You employ raw materials, duty-free, and then you go into manufacturing and processing. Then you export the finished product abroad. The export income deduction for 2014 is retained at 40%. You can claim that against your taxable profits. Introduction of tax holiday for maritime shipping. For Fiji, some of the outer islands from Viti level, they face problems of having the ships to come out to the island and bring their goods. There are about 300 small islands out of the main island. The resources are there, but the coconuts and root crops, and but the problem we have is the ship to go out there and bring those resources here in the mainland, where the infrastructure to export those goods abroad are here in the mainland. So we've introduced tax holiday to entice the shipping industry to go out to those small islands. There's a 7-year tax holiday for shipping companies servicing uneconomical routes, which include Rotuma and Lau. The uneconomical route will be ring-fenced. So it's the tax holiday, 7 years tax holiday, is only available to those shipping companies that will service the uneconomical routes, not the economical ones. Vanua level, which is another mainland out from Viti level, there's regular shipping companies that are going there. So it doesn't include that shipping services provided to Vanua level. There's also incentives for unit trust companies. Withholding taxes and capital gains taxes on interest income distributed to investors of the unit trust will be waived. For small and micro enterprises, tax exemption threshold will be increased from what it was at 300,000. It's now increased to 500,000. That's the turnover threshold for SMEs, which means less than 500,000, you will not be paying any corporate tax or normal tax. There's also incentive for backpacker operations. If you're going to be engaging in backpacker operations, income tax exemption will be sort of increased for locally owned backpack operators with annual sales turnover of 1 million. Up to 1 million, the cap. Less than that, you will not be paying any corporate tax or normal tax. The senior citizens, there's an incentive of deposited, having your monies in bank deposits. The interest that you derive from having your deposit in the banks up to 16,000, that will not attract any interest withholding tax. I've already mentioned about the social responsibility levy. The other revenue measure in 2014, you feel when you paid your travel here to Fiji, going back, the airport departure tax has been increased to $200. A component of that would be directed towards the conservation of the environment. It's sort of like an environment levy. We also have the gold card system. The gold card system, that is in our first floor of the FERCA building. The FERCA building, if you go towards the seaside, going towards the government building, the Parliament House, it's called Nasese, around that foreshore. FERCA building, Fiji Revenue and Customs Office is over there. On the third building, the first floor, we have the Gold Card Office. The Gold Card Office provides an incentive system for our best and compliant taxpayers. We target the 20% of our top revenue earners who bring in 80% of FERCA's revenue. And we provide them very favorable incentives. Both include tax and customs incentives. They have priority registration with the Land Transport Authority, with the Airport Fiji, and Fiji Airways, Jumbo class incentives, privileges. We also have travel incentive, duty-free allowance of 2,000. That is the normal travelers, they enjoy 100,000 duty-free allowance, but for the our gold card members, they have travel allowance of 2,000 and priority check-in for our gold card members. Going on to the duty concessions that was announced in 2014 for the shipping industry, reduced fiscal duty to 0% on importation of spare parts for maritime vessels. For the agricultural incentives, reduction of fiscal duty to 0% on importation of all agricultural items. For the fishing industry, exemption of bunker fee of 2 cents per litre for local fishing vessels. And duty-free concession on specialized fishing item equipment which are currently not covered under the existing concessions for the fishing industries. In promoting our locally owned backpack operations, There's duty exemption on the importation of raw materials and equipment used for the establishment of a backpacker hotel. This incentive will only be available to the backpacker operation who is granted the income tax holiday. So the backpacker has been given exemption under the 1 million taxable threshold. So if you're given that, then you can also enjoy this importation of equipment, which is 0%. The other customs changes, this relates to duty concessions for returning residents. This will apply to former Fiji citizens. Not former Fiji citizens, yes. And also for dual, if you're having a dual citizenship, which means you're also a Fiji citizen. A duty concession, that's under that code 220. That means free fiscal duty, free import excise, and also free VAT, value added tax, on importation of household effects and vehicles by returning residents. This concession is subject to the following conditions. Of course, there are some conditions attached. The person should prove to the satisfaction of the controller, who is also the Commissioner of Inland Revenue, Commissioner of FERCA, the CEO of FERCA, that he or she is returning to Fiji permanently. The person should have a valid visa. The vehicle must be owned and used by the person for a period of 12 months or more. Documentary evidence and registration papers, insurance documents, sales and purchase invoices are required. The vehicle must be imported into Fiji within 12 months from the date of arrival of the person. The vehicle should not be less than 5 years from the year of manufacture and less than 8 years from the year of manufacture for LPG, CNG, and solar vehicles. The concessions is be subject to some other conditions. It may be subject to other conditions that the controller may impose. I've got my colleague from the customs that's there, sitting there, Shalini. So I'm not a customs person. If there are some other conditions that the controller may impose, she can, if you have any questions, she can answer those custom questions. That the disposal of the use of the goods for purpose other than that of which concession is granted is subject to the condition laid down by Section 17, and she can also answer that. What does Section 17 of the Custom Tariff Act says? These incentives have been available from 2001 coming forward, and now and then there's been amendments to the legislation trying to improve it more with a reduction in tax rate, with the increase of the tax holidays. The tax incentives are available in tax holidays, I've said, tax holidays, tax deductions, and exemptions. The capital markets, I've already mentioned that any trade in the capital markets or you list in the capital market, South Pacific Stock Exchange, the corporate tax rate is 10%, reduced to 10%. Trading in the capital market is exempt from capital gains tax. The Fiji My Second Home program and the foreign currency account, this is an incentive that's been promoted by Investment Fiji with the the three agency, Investment Fiji, Reserve Bank of Fiji, trying to entice former Fiji citizens or retirees to come and buy their second home here in Fiji. The incentive is you've got to bring your monies here to Fiji and deposit it in an account here in Fiji. For the first 2 years, it will be exempt because you'll be getting interest on those deposits from the bank. Those interests are exempt from tax. So the intention is on the third year that you are going to buy a home here in Fiji. And from the third year, once you buy your home, you've got to retain a minimum of 50,000 in the bank so that it'll be exempt from interest, withholding bank interest. The export incentive, I've already mentioned that. If you're going to be engaging in the export industry, manufacture processing goods in Fiji, get it out of the country, there's a 40% export income deduction that is available. I know that why I said it's been extended to 2014 because we should have phased out this incentive when the IMF came and did a fiscal policy review to phase out some of the tax holidays and incentives. So this should have been phased out in 2011, but we've been extending it to entice the export industry. For tourism projects, if you're going to be engaged in building hotel, the tax holidays that are available is 10 years tax holiday. That's in the general incentives. The level of investment is 7 million. There are two types of incentives that are available: 10 years tax holiday and also the 55% investment allowance. Investment allowance is like a tax reduction. If your investment level is less than 7 million, you build a hotel here, construct a hotel, then you can claim for the 55% investment allowance. So once you go into the operation, once you've constructed your hotel, and once you commence into operation, in your taxable profits, the 55 investment allowance reduces that until it phases out. The 7 years tax holiday, if your investment level is above 7 million, then you can give yourself a 7 million 11 years tax holiday. That is available under the 11th schedule of the Income Tax Act. With the 10 years tax holiday, we call it sleep. You can also, for your first year of establishment, you can import equipment, raw materials for establishing the hotel. Any importation of your raw equipment and raw materials and equipment, it'll be duty-free for first year of constructing your business. But there are also some concessionary given to hotel equipment. It comes under Code 235 under the Customs Tariff Act. My colleague at the back can, if you have any questions, can explain to you what are the items under Code 235 on a concessionary rate. Not at 0. 0% is on that 7 million level of investment, but it's at a concessionary rate. The agriculture incentives. That's there, 10 years tax holiday. The income of a taxpayer derived from a new activity in commercial agricultural farming, agro-processing, as approved by the Commission of Inland Revenue and established from 1st January 2010 to 31st December 2014, shall be exempt from tax for 10 consecutive fiscal years with capital investment of 2 million or more and employs 30 local employees or more for every income year. So you've got your 30 employees locked in for that income year, and the level of investment is 2 million. And also under there's also incentive for the energy sector. The income of a taxpayer derived from a new activity in renewable energy projects and power cogeneration, as approved by the Commissioner, is to be exempt from tax for a period of 5 years. That is for renewable energy projects. Also, the income of a person derived from a new activity in processing agricultural commodities into biofuel, as approved by the Commissioner, from 1st January 2009 to 31st December 2014, is to be exempt. No, I'm sorry. This has been increased to 2018. Is to be exempt from tax for a period of 10 years, provided the taxpayer has a minimum level of investment from 1 million and employs more than 20 local employees or more for every income year. We also have incentive under the ICT, Information, Communication and Technology. The income of a ICT business that is granted license after 1st January 2009 for a period of 13 years from the date of issue of license granted, provided that the business employs 50 employees or more for 6 months within the income year and 60% or more for the total value of its services in the income year is exported. A license fee, you've got to pay a license fee of $1,000, and the tax holiday is available for 13 years. For the mining industry, there is no limit for the incentive. The application, if you want to avail yourself to that incentive, it's provided for under section, your authority would be section 16 of the Income Tax Act. You make an application to the Minister for Finance that you want to engage in the mining industry and you want a tax holiday. So some of the conditions would be the level of investment that you want to bring into the country. I know for the Vatukkola gold mine, that is the only mining company here. They were given 20 years tax holiday, and also duty-free concessions from establishing the company, and also export tax concession. So it's an open-ended incentive under the mining industry. I think I've mentioned all, in summary, all the incentives and duty concessions that are available. You can refer to the booklet if any questions or if any advice you need further. I hope the Honorary Consul's office can arrange a visit to the FERCA office just to go and see where the FERCA office is located. And when you can come straight there to lodge your applications. For the application process, first you got to register for a tax identification number. That is something similar to the ABN in Australia. For an individual, it's called the IRS 001 form. For registration of your company, it's called the IRS 003. I've got my card there, and also in the brochure, the website for FERCA. Our website is it contains a wealth of information. All the legislation that we administer 13 pieces of legislation, 13 laws, and we have updates, very favorable updates. All day updates are, we post them in our website. All our circulars, standard procedures, and the contact persons. So if any query, you can go into our website, or I have my card, then you can contact us directly. For processing of your tax identification number, if all documents are in order, Investment Fiji has mentioned the one-stop shop. All documents are in order. Within a day, you'll get your tax identification number. It may even take just a few minutes to get your tax identification number. For the incentive applications that are available, all applications are, except for the hotel projects, all applications are to be addressed to the Commissioner of Inland Revenue, or CEO FERCA. For the hotel projects, they are to be addressed to the Minister of Finance, but the applications are to be lodged with the FERCA office. Addressed to the Minister for Finance, we're trying to streamline our process. It used to go to the Minister of Finance. So we want to fasten the process, comes directly to FERCA, because FERCA is the one that will assess your request for tax incentives or concessions. That takes 5 days for processing with FERCA. We process, we recommend to the Minister for Finance, and then they will advise you on your request for concession. FERCA's main objective is to provide and facilitate a conclusive platform for you, our foreign investors, in terms of the tax incentives and duty concessions available, to be able to compete in the global community. Also, by diversifying our economy in building ties with you as our new partners and businesses around the world. Over the years, we believe that we have made significant progress in partnering with the private sector, but there are still many opportunities to harness and challenges to overcome. The past year has been tough for many people. The economic downturn, floods, and cyclone earlier this year has made life difficult for many people and challenging for businesses. For FERCA, we are also seeing the effects firsthand as we interact with businesses every day. The change in environment has also meant new risks emerging with which requires a change of our approach. Our main objective is to protect Fiji's revenue base by encouraging high levels of tax compliance and investment. The key to this at any time is maintaining the trust and confidence of the community, in particular you, the private sectors. Thank you very much.